Hey guys, good afternoon and welcome to Your Stocks. I'm Pavitra. With me is Ekta and we have ourselves a good day of trade. We're at the high point, 128 points higher right now. And you know, we've only moved higher since the open, right? So it's a full 0.7% gain in terms of what we're seeing on the Nifty. The mid cap's also doing very well, 280 points higher there. And if you take a look at the Nifty Bank, that has also moved to the high point of the day. It is around 320 points in the green. So all in all, a very good session for our own markets. You have around 1,700 stocks which are gaining for around 1,250 which are in the red. Ekta, no complaints as we start off the week.
Hi, Pavitra. Yes, absolutely. We've started off the week in absolute splendor for the markets at this point in time. We have the advanced decline ratio, which is extremely strong as well. And that's indicative in terms of the strength that we're seeing, or the inherent strength that we're seeing, along with the fact that a lot of the FIIs have been buying continuously into our markets. So we are seeing either triple-digit or four-digit buy figures coming in from the FIIs every day, giving you an indication that, yes, you know, they seem to be bullish on the Indian market at this point in time. But nonetheless, we do have our guests lined up for us this afternoon to take us through what is a very lively market. So I'm sure we have a lot of queries coming our way. We have Ruchit Jain of 5paisa.com joining in, and Vijay Chopra, who is here with us as well this afternoon. Ruchit as well as Vijay, thank you very much for joining in. Well, before we get to the queries, Ruchit, you know, I wanted your quick analysis with regards to levels on the market now on the Nifty. 18,441 is currently where we're at. We're, you know, just about marginally away from record highs at this point in time. How would you approach both the Bank Nifty as well as the Nifty?
Yes, hi, very good afternoon to both of you. I think there's no doubt about the trend, that the trend for the market has been positive. Primarily, not only it's few of the stocks which are not taking the markets up, but the broader markets have been doing quite well since the start of April. So until we get any signs of reversals or initial profit bookings, I think one should continue to stay with the trend. Now, as far as levels are concerned, I think the way the markets are moving up, the support base is shifting higher. And now 18,330 technically has become a very important short-term support. So I'll take 18,330 to 18,300 range. So primarily where the put tracking is also have also been seen at 18,300 strikes. So that is an important support range now. And on the high side, 18,500 would be the initial levels to watch out for, being a round figure as well as call writing positions which are there. But I think very soon this will be taken out also, and we could head higher towards 18,700, 750 mark. So ideally, it's a buy-and-dip market that one should continue to have an approach. And of course, Bank Nifty is stayed away from its all-time high levels, which I think it may be seen in next 1.5 hours or so. So banking NBFCs, I think that outperformance is likely to continue for the short term.
Okay, got that. That is a call on the market. But let's get into it and bring you all of the individual queries that we have, and then you can help us with that as well. We have Shweta Srivastava, who writes to us from Pune. She holds 30 shares of Bajaj Auto, which she bought at 2,000. So she's making a good profit there. She also has 20 shares of M&M, which she bought at 300. She's a long-term investor. She's clearly making money on both of these, and she wants to know whether she should hold or she should, you know, book her profits and get out. Vijay, let me come to you first on this. This entire space has been doing so well, right? The auto pack and her buy prices, of course, for both of them are extremely attractive. Do you think these are just portfolio stocks? You should hold on to them, especially considering that she's a long-term investor?
Well, I think that whether you're a long-term or a short-term investor, I won't comment on the very long-term part, but I think that profits should be booked and money should be rotated across sectors. So I think that, you know, she has had a stupendous run in the stock, and stock is trading about 45.80. One should book profits in Bajaj Auto for sure. M&M, I think that, you know, one can hold because still a lot of steam is left in M&M. And I think that it can go back to 1,400 odd levels. But Bajaj Auto, for sure, it's a sell. And, you know, one should book profits and look into other companies to invest into.
Okay, Ruchit, you know, on the other hand, auto stocks, they're either very close to their fresh 52-week highs or they've done very well this year. So how would you approach Bajaj Auto as well as M&M in that context technically? Do they show further strength?
So I'll start with the Nifty Auto Index itself because we have seen that this index has given a very good outperformance compared to other indices in the last 2 or 3 months. And the way the charts are set up, I think this outperformance is likely to continue going ahead as well. So overall, the outlook on the auto space is positive. Now, within the two-wheeler space, the technical structure of Bajaj Auto is not negative yet. The high top, high bottom structure has been seen. In fact, in the month of April itself, we have seen that the stock had given a breakout from about 3 to 4 months of time-wise corrective phase action. So I think technically it's good. So I would advise to continue to hold on to Bajaj Auto. So probable targets what technically is looking is around 4680 to 4700 in the short term. So since she's a long-term investor, so still she can hold on, and periodically when the stock moves higher, can take a review on the stock. And similar view on Mahindra and Mahindra as well. We have already seen a price-wise corrective phase behind us in the stock. Although it's a slow and gradual up move, but mid to long-term charts are still positive. Indicating target projection somewhere around 1440 to 1420 range. So about 10 to 15% at least higher from the current levels. So my advice would be to hold on to on both the stocks.
Okay, hold on both of these stocks. That is Bajaj Auto and M&M. The next query coming in is very interesting. We have Shalini Punj who writes to us from New Delhi. She holds 100 shares that she bought of Nykaa at 300. She's a medium-term investor, so of course she's seeing some losses over there. 125 on Nykaa right now. She also is looking to buy LIC, but she wants to know if she should reconsider her decision. Ruchit, your call on both of these. Nykaa, of course, she's seeing quite a significant loss. Do you think in the near term or medium term there could be a little bit of at least recovery in this stock? And do you think LIC is a good bet at these levels?
Well, I'll keep myself, my comments restricted to Nykaa itself, because LIC chart structure is not that clear post-listing still. But yes, the Nykaa, the trend still remains quite negative. In spite of this up move that we have seen in the month of April and May so far, many of those mid-cap names or the large-cap names who have seen underperformance, even some of those names which were listed in last couple of years, have seen a good amount of buying interest coming in the stock, in those stocks. But still, Nykaa is one of the stocks which has been showing relative underperformance, and we have not seen any kind of price action which has been followed, which has been supported by higher volumes. So I think such underperformance during the time when markets are approaching all-time high, so better to avoid such stocks and rather look for opportunities somewhere else where these losses can be covered. We may get some in-between bounces, considering the markets are in momentum, but use those in-between bounces to take an exit from the stock.
Okay, all right. And Vijay, what would your view be on these new listings / new companies as well?
Well, about LIC, I'm fairly confident that it's making a very good pattern. It's a good rounding bottom formation which is happening. And I think that LIC, if somebody buys with at least 2 to 3 years perspective at around these levels, 570 odd, it has the potential of going up to 700, 750, even 800. But it's going to be a longer period. As far as Nykaa is concerned, I'm still not very confident with the balance sheet of the company, because they've not been posting decent results. So I would recommend that probably a Paytm looks better because it has shown better results than a Nykaa. Even Zomato has been consistently growing in its revenues and profitability. So in the new age companies, so to say, LIC looks better. LIC definitely is not a new age company, but again, LIC chart wise and fundamentally looks better. And I would prefer to exit Nykaa and get into a Paytm if you want to get there. Or there are scores of other opportunities in the specialty chemical space, so you can get into some good specialty chemical company as well.
Okay, all right. So that's the view coming in. Let's get to another query now. Anima writes to us from Guwahati. She holds 15 shares of CG Power, which she's bought at around 340. So she's just about flat at her buy price. And 5 shares of Apar Industries, which she's bought at around 2,666. So she's making a marginal profit there. She's a long-term investor, wants to know what to do with both these stocks, CG Power as well as Apar Industries, whether or not one should hold them for the longer term. Vijay, over to you on this one.
I think that Apar Industries, I'm looking at the charts, they look really good. And if somebody is a long-term investor, I think that, the stock is a good buy. Fundamentally speaking, it trades at a PE of 16. It has an ROC of close to 50 and ROE of close to 33. So results-wise also, the balance sheet looks very good. They have increased their sales from 9,320 crores in 2022 to about 14,352 crores in 23. So there has been a decent jump. And finally, the one indicator which I watch the most is the EPS. So the EPS has grown from 67 to 166, almost 100 points up. So I think that APAR is a wonderful company, and one can definitely hold on to APAR. What was the other company you said?
CG Power.
CG Power. So I think, the stock did correct a bit lately. But yes, it is trying to come back. So I would recommend an exit on rallies.
Okay, I think we've lost the feed for Vijay there. We'll just get back to that. But would you have a view technically on that, Ruchit, on both these stocks?
Yeah, so CG Power, I would advise to take an exit from the stock. Although the short-term trend is positive, but we have already seen a good run-up in last 1.5 years in the stock. And the momentum readings on the mid to long-term charts have gone into quite overbought zones. But I think the risk-reward ratio is not in favor to hold on for a long period of time in CG Power. So it would be an exit. But apart from industries, I have a positive view. Technically, high top, high bottom structure is there. On every correction, we are witnessing that the price corrections are not being supported by any high volumes. But whenever the price is correct towards the support levels, we again witness good buying interest coming in. So from a medium-term perspective, APAR Industries should be held up.
Okay, got that. Vijay is also back with us. Vijay, would you like to complete your thought? I mean, we lost you midway.
Yeah, APAR, I mentioned that it's a good company to hold with a longer-term perspective. Yeah. Wonderful results, and balance sheet also looks very good. CG Power, should be exited on rallies around 350. One should exit.
All right, we just really don't have too much luck with that line. We're going to try again, but in the meantime, let's get to the next query as well. We have Hardeep Chadda, who writes to us from Gurgaon. He holds 60 shares of Craftsman Automation, bought at 22.40, so making some money there. And he also has 100 shares of Varun Beverages at 615 per share. He's a long-term investor and wants to know whether to hold the shares for another 3 to 4 years. Ruchit, with that time horizon, 3 to 4 years, what do you think of both Varun Beverages and Craftsman Auto? He's already making some money here, but do you see the upside, the up move continuing here?
I think I would recommend a hold on both the stocks from next 2 to 3 years perspective. Because Craftsman have already seen a corrective phase, but post their corrective phase, what we have witnessed in last 3 or 4 months, since last 2 or 3 months, the stock has witnessed very good volumes along with the price up. So this is a good structure. So I think the mid to long term structure is still positive. You can expect levels somewhere around 4,000 to 4,100, where you can again take a review on the stock whether should take an exit over there or not from next 2 years perspective. And Varun Beverages, there's no doubt that this has been one of the outperforming stock over last couple of years, and still the trend remains positive. No signs of any kind of sell-off coming in. Any kind of declines are getting bought into. So until we see any such reversal signs, I think it's better to ride this trend. Levels wise, the reciprocal retracement theory indicates a probable long-term target somewhere around 1,680 to 1,740. So ideally, that range at least should be expected. When it comes over there, then one can take a review on this.
All right, that is the view on both of these. It is time for a short break, but don't lose sight of the market. The Nifty Bank is 340 points in the green right now. It continues to move higher. If you take a look at some of the top percent gainers, you have something like an IndusInd doing very well. But, in terms of the contribution, it is really Axis and HDFC which are perhaps contributing the most to the up move right now, 0.8% on the Nifty Bank. Take a quick break. We'll be right back, and we have lots more queries in just a bit.
Welcome back. Well, multi-month highs coming in for the Nifty and the sensex as we speak, and we have the Bank Nifty, which is very close to its record high, so doing extremely well in terms of momentum for our markets. Just want to point out in terms of stocks which are really contributing, it is sector agnostic at this point in time. There is not one particular sector which is leading the gains in this afternoon's trade. So, for example, we have Infosys, ITC, Reliance Industries, HDFC Bank, all of them which are contributing to the up move. As you can see, on the downside is the likes of Maruti as well as Cipla and Adani Enterprises. But remember, the likes of Maruti have already seen a strong run to get to levels of over 18,400 on the Nifty in the past couple of weeks in any case. So we have the mid-cap index, which is doing extremely well as well. And the good part is that the advanced decline ratio is managing to hold through the trading session. The advanced decline ratio should come up for you in terms of a graph. It currently stands at around over 2,000 stocks, advancing to around over 1,600 stocks, which are declining at this point in time. You can see that after that early crisscross, there's just been a steady gap which has been maintained between the green and the red line. But we still have with us Ruchit Jain as well as Vijay Chopra to answer all of your queries this afternoon. Our query now is from Rahul, who writes to us from Chandigarh. He holds shares of Anand Rathi Wealth, which he's bought at around 844, and 100 shares of Chennai Petroleum Corporation, which he's bought at around 180. He's a medium-term investor. He wants to know what to do, whether he should hold or sell these particular stocks. Well, making money at least on one of them. Vijay, I hope our connection is good now. If you could recommend your call on both of these fundamentally.
Chennai Petro, even on your channel, I have been recommending since almost 200 rupees. So I think that, this is a fantastic stock. It trades at a price to earning of 1.3 with a return on equity of about 74, return on capital of about 46. The market cap is 4,600. And mind you, the profit the company has posted is close to 4,800. So, the profit is more than the market cap. So long-term investors, I think that, Chennai Petro is a stock to latch on to. It's a good dividend yielding company, Government of India company, having stakes from Iranian government and IOC. So Chennai Petro definitely, I would say, is a fantastic company to hold on to.
And what about Anand Rathi? That's the other one. So Anand Rathi was, yeah, go ahead.
Yeah, so Anand Rathi, so to say, has, is undergoing some correction. I would say that, exit on rallies is the call, because all these brokers are facing a lot of issues and, challenges from the likes of Zerodha and Upstocks. So I really don't know going forward what kind of revenue streams these brokers would be having. So I think that, it's better to be in safer companies with a low PE. Anand Rathi, although has done very well as a stock, but I think that, exit is on rallies is my call. So be with conservative companies whenever market is topping out.
Okay, all right. Would you have a view, Ruchit, on both these counters?
Yeah, I have a view on Chennai Petro. So the short-term as well as medium-term trend for Chennai Petro still remains positive. Off late post the announcement of the results, also we have seen that the stock had witnessed buying interest with very high volumes, and the support base for the stock has now shifted to 280 to 75 rupees. So mid to long-term trend remains positive. We can expect levels around 380 to 370 range in this stock. So I would recommend to continue to hold on Chennai Petro.
Okay, got that. Continue to hold on Chennai Petro. The next query, we have another Rahul who writes in from Madhya Pradesh. He holds 50 shares of HPCL at 100. He also has 50 shares of BPCL at 500. So he is making some money on HPCL and a little bit of a loss on BPCL as well. He says he's a medium-term investor and wants to know what he should do. What do the future prospects also look like? Ruchit, come in on this and take us through what you would advise on both of these oil marketing companies.
Well, I would recommend to hold on to both these companies. In fact, all three OMCs we are positive, because technically what we have seen that off late when the prices had corrected, say in BPCL or HPCL, we have not seen any kind of higher volumes support on the corrective phases. And from lower levels, all the three stocks, in fact, have managed to show an utmost supported by good volumes. There may be some short-term volatility. BPCL have shown some negative crossover, but that's only on the short-term charts. But if the view is for at least 6 months and beyond, then I think the stocks would continue to do well. So I would recommend to hold both HPCL as BPCL, keeping at least 6 months view.
Okay, all right. Would you have a view, Vijay? HPCL is in focus on account of possible monetization of its lubricant business as well.
That valuation-wise, these companies are completely undervalued. There is a deep value in all the OMCs. And I think that, long-term investors definitely can hold on to the stock, maybe forever, because, the valuation is going to unlock if they start leveraging on the kind of assets these companies have. So long-term investors, no problem at all. But even what I heard was this lady is a short-term investor or medium-term investor. So I think that if the stock goes up to say 275, 280, I'm talking about Hind Petro, so one should book profits. And similarly with BPCL, we are already seeing a dip today. But again, if it starts rising again, 385, 390 would be the level where I think that profits can be booked.
Okay, got that. That is the call on both HPCL and BPCL. And with that, Vijay and Ruchit, we're going to wind down on the show. But thank you very much for taking out the time and taking our viewers through all of these queries that they have sent us. It's a wrap on this show. We leave the market in solid form, 140 points higher on the Nifty. 18,455 is where we're at. It's shaping out to be a good session. But stay tuned because closing bell comes up for the final hour of trade.